What's up, everybody? Welcome aboard Bubba's Daily Update, and great to be back. A long 36 hours in Las Vegas, and obviously very sad, and our condolences and thoughts and prayers go out to all those who were there. I didn't know what was going on. I thought it was a car accident, but I was right there 1,000 feet away from all the action, and of course my plane got canceled. But what have we missed? Well, nothing. The markets make new highs. It's a new thing. We're going to make new highs every day forever. What we really see here is a market that is, again, dull. And when you have dull markets, they drift higher. Equities drift higher, commodities drift lower. That's the way that dull markets work. Now, at the end of the day, again, there's not a lot to trade. So we're really saying, hey, maybe you want to sit back and observe the markets. Nothing right now bothers these markets. Nothing comes in and says, hey, we should go down here. And that's kind of the way markets, when they're going up and they're confident, they will shrug off bad news and they will accelerate on good news. Now, I haven't seen any news that I would consider great, but again, markets continue to churn their way higher. And again, new highs, new highs, new highs. Now, I think you saw some interesting things. I think you saw a blow off in the Russell. Now, when you get the blow-off pattern, it doesn't mean that we're going to turn around and go right down. What it means is that it will probably settle. It's probably an opportunity for a quick scalp to the short side, but then it will make a decision. It'll probably go back into consolidation and then move on from there, and it'll figure it out. But I think some of the things we're seeing is, although the euro currency is a little stronger today, euro currency looks like it's going much lower. The bonds, hawkish Fed, but not that we care about them because they don't know anything, but bonds are starting to fall. Bond futures, yields are starting to rise, which is, I think, the old backdoor rate cut that we talked about by the Fed. They're probably the big sellers of these bonds here. I think that overall, this is a great market to observe and not really to get too involved with, unless you're trading short-term futures with me. But if you're trading, longer term and you're looking, again, I'm not advocating that you sell these markets. I'm not telling you to get short. I'm saying they're very concerning the way that they're trading right now. And that what I mean by that is it takes away our opportunities because there's not enough action, there's not enough volatility. Volatility is again near the flat line. It figures to take out the low. We are seeing extremely tight moves across the board, which is again uncharacteristic of a market. So these are all signs that are warning you to maybe sit it out and watch. If you remember, we talk about this often, the markets are open 241 days a year. So let's not think that we have to make a trade happen today. Let's not think we have to have something happen. We have the jobs number coming on Friday. Maybe that'll break the market loose. I don't know what's going to break these markets out. They're going to break one way or the other. And again, certainly we can't say that it hasn't been breaking the upside because that's what we've seen. We've seen continual movement to the upside. Now, again, I'm not happy about the upside, and not because I'm short. I'm not happy because, again, I don't like the type of trade we're seeing now. This narrow banded, not exciting trade that does not create great opportunities if you want to be more active in the market. And I think this is something that we need to just understand. But let's not fight the tape. Let's not think that we're smarter than the tape or the markets, because the market right now, look, they're going up. So there's no reason for us to step in the middle of it and say they're wrong. I think you want to look at certain levels. I think gold is probably coming down to a spot you could probably take a chance to buy. I think silver is the same. I think when you look at the picture, we've got an extremely dull market. So anything I would buy today would be something that I would be willing to hold no matter what. So what I would say to everybody here is that if you were looking at gold, for example, you would buy a small portion of what you'd be willing to buy. I think the commodities are a buy. I think we see a very mixed market in the grains as well. They started out, everything was higher, then beans and wheat were higher, and then just wheat was higher. Beans are stuck in that range, 940 to 977. Corn, I'm not worried about it right here between 345, 350 and higher. I think it goes higher. The cattle markets and hog markets are whipping around a little bit. But again, I think if you look at it, live cattle or fat cattle, I'm a buyer. Feeder cattle, I'm a seller. Hogs, I'm a seller now of December. And I think we've seen some interesting action for quite a while. When December hogs went over October, which means they get more expensive, and then they came back down. It was interesting to see the action, but now all of a sudden October is kicking into gear. So again, there's just a lot of things going on, but the lack of interest, the lack of real activity should keep you and keep the markets at bay. Again, I don't think that this is the right time to be a real aggressive trader. Again, it doesn't mean you can't do something, but my recommendation is to kind of sit it out and sit tight. And if you see something that bites you in the nose, you go ahead and make that trade, take a chance there. But when you have this lack of real activity, you have no volatility, no volume, I think it's better to go out and play golf and go to lunch. I mean, again, I'm telling you from actual practical experience, there is not a lot going on here. There's not a lot of news, to drive markets. There certainly is nothing that really makes the markets afraid right now. If you look at yesterday and the massacre, you would think there might be a little fear there. There wasn't. The markets didn't even look at it. So I think the best case of action here, or the best course of action here, is to observe the markets, watch what's going on. Don't get too excited on either side of the boat. Let's kind of let them trade and let the markets develop a solid footprint. Right now, they're still ticking higher, and some of them are starting to look blow-offy, toppish, and we'll look to see if we can take advantage of that. But until we see some real trade, in other words, some volume come into the market, and we see some price volatility, and not 50 points in a 22,000 point index, that will be when we want to get more excited. In the meantime, it does look like the Dow is kind of trying to blow off. I mean, up 150 yesterday, up again today. We'll see. In the meantime, let's be cautious, let's be patient, let's be disciplined, and let's come back tomorrow for Bubba's Daily Update. Thanks everybody for being here. We'll see you back here tomorrow, same time. Bubba's Daily Update. Have a great day, everybody. Thank you so much. We'll see you later.